Okay. Yeah.
So we're going to do the good morning, San Antonio. It's Ernest Enriquez here, and welcome to Homes and Homies. I am here with John Hansen.
How you guys doing?
And he is with?
My insurance group.
And I am with eXp Realty, and we are doing our first ever podcast here. Going to talk a little bit about homes, chill with the homies. Some of you might know, John and I went to the same high school, not the same year, but who cares, right? Same just.
We'll let you guys guess who's older.
Who has more white hair on camera? That guy. But now we're going to sit down today, talk a little bit about some of the perks of insurance, what it means to have homeowners insurance, things to look for in homeowners insurance. And, we'll talk a little bit about what a real estate agent does as a real estate agent here in San Antonio, Texas. I am dual licensed in both Washington and Texas. We're going to talk a little bit about my duties to you as a buyer as well as a seller. And we're also going to hear from John as to what are some things that a homeowner should prepare for when shopping for that homeowner's insurance policy. So without further ado, let's talk about that, John. What's the importance of a homeowner's insurance? What are some different types of coverages, as you and I were just talking?
Yeah.
My personal experience with homeowners insurance.
Oh, yeah. It sounds like you're having some fun with it.
Oh, yeah. Getting a little bit of mixture both.
Yeah. So I'm at the very beginning of the day, essentially, homeowners insurance is protecting what most people would call their most valuable asset, right?
Yeah.
Your house is going to be probably the largest purchase you'll ever make,
right?
For the most part, right? It is a catastrophic policy. It's not a home maintenance policy. And so a lot of people look at it as, well, I'm paying this money. Yeah, you're paying this money in case a fire happens, in case a pipe were to break in the wall and create $100,000 worth of damage.
Yeah.
And that's really what that home policy is for, is those catastrophic events, those awful hailstorms that come through Texas all the time. And I was just reading an article earlier. We were number one last year in the nation for hailstorms. Really? Yeah. So, yeah, we definitely got our fair share last year.
That's crazy. Yeah, and I was telling you a little bit about my personal experience. Even as a real estate agent, we don't claim to know everything there is to about every single piece of, part or process of the real estate itself, right? Because even, looking in my eyes, I'm looking at a homeowner's insurance policy, kind of like what you were saying. But here we are in the midst of a claim, and we're finding kind of different processes that we got to go through in order to have those protections and even get them covered.
Yeah.
So talk a little bit about that.
Well, some of and we won't name the company.
Yeah, for sure. Let's not name the company.
But yes, some of it is kind of just bad luck on your end with the fact that you have damage. There's a contract. They're obligated to pay you and indemnify you.
Yeah.
Right. And it seems like there is a path, though, if they deny the claim, and there is actually, in your case, hail damage.
Right.
And so, and you get to go down that road. It's not a fun road, but you get a public adjuster involved, and hopefully after the public adjuster submits his things to that claims department. And just so we know, I am not licensed to do claims.
Yeah.
I am licensed to sell insurance, right? But after the public adjuster gets involved, a lot of times they get the ball moving forward, and then at the end of it, if they're still not budging, there is always an attorney that you can get hired.
Right.
And hopefully it doesn't come to that.
Yeah, and I mean, that's not the process or part of the process of which we're currently in, but we experienced hail damage. We've had two separate claims. One's been denied. Of course, we're kind of going through these loopholes and just learning along the way, because it seems like everybody gives you a different kind of alternative, but understanding your homeowner's insurance policy and what rights and protections you have is going to be crucial when actually shopping for that homeowner's insurance, because like us, we never would have known that, we could go to a public adjuster, get a public adjuster. Like, there's more steps to than just getting that initial no.
Absolutely. Well, in ideally, you don't need to, right?
Right.
Because ideally, if there's hail damage, that's pretty cut and dry. There's hail damage, you have a home insurance policy that covers replacement cost coverage for your roof.
Right.
And as long as you have that, it's part of the agreement you made with that company.
Right.
That they will, in exchange for premium, they will cover these certain things.
Yeah.
And that is one of the things it should cover.
So kind of flipping the script and putting it back on my table, some things, and I mean, a recommendation from you would be for a homeowner or somebody looking to buy a home to ensure that they actually get that home inspection and have physical photographic evidence of the roof not having any current damage whatsoever.
Absolutely, that's super important. And that's part of just your department a little
Right.
bit too. On the someone buying a new house what does that inspection look like? If there is some questionable stuff, nobody pays for pre-existing damage,
Right.
And no insurance company is gonna pay for pre-existing damage. So, and lots more so now than ever before, almost every single home insurance company will do an inspection on that property, on that risk. And somehow, just because it was several years ago,
Right.
that might not have happened with you.
Yeah, no. So, and in our case, the roof's the age of the home, and there's no prior evidence of the roof or knowledge of the roof actually being replaced. So, I guess for the listeners out there and people tuning in, what would your recommendation be for somebody who's bought a home, has the age of the home roof on there? What would be kind of like some things that you could give them advice on, and that you guys would actually cover, or things that you would negotiate on?
Yeah. So what I would say is, as a responsible homeowner, roofs have a life, right? And so I would set aside some money and know that as far as maintenance on a house goes, every 15 to 20 years here in Texas, because of like the brutal summers we have, and just we do still have some cold in the winter. That sun is awful on shingles, right? It's going to be 15, 20 years. You're going to have to replace a roof,
right.
And that has nothing to do with insurance. That
right.
just has to do with being a homeowner, right? But knowing your policy and knowing what you agreed to is important. Right. So if you sign up for a replacement cost policy, let's say you bought a brand new 2024 house and you have replacement costs on the roof. If it's 5 years from now, 7 years from now, and as long as that policy form and that policy language hasn't changed,
mm-hmm.
you're entitled to, minus a deductible, what it would cost in the year 2030 to year 2032, what it would cost to replace the roof. Right. And so there are other forms where there's some companies that will do a schedule, right? And you just need to know this, because there's several different companies out there that will do schedule roofs.
Right.
And that schedule means there's almost like a straight line depreciation. Right. And so if that happens, they're going to knock off 5 years, and if they're calling it a 30-year roof, you can do the math. Mm-hmm. You're not getting your full amount of money, and you still have to pay your deductible.
Right.
Yeah.
Makes sense. I mean, and that's just what every homeowner should look at when they're going to buy a home. Is when shopping for your insurance, it's imperative to the decision that you look at those articles being attached, those exclusions being attached, because not only does the premium play an important role, it also, like you're saying, it could be that depreciation value of the roof, because their insurance company knows the age of the roof.
Yeah.
So
absolutely. And the truth is, everybody's concerned about price, and sometimes you get what you pay for.
Right.
So if you're just looking for the cheapest price or the least expensive price, and you're not caring so much about those coverages and which policy form, it's a gray. So in the lack of knowledge, you're always going to go with the cheapest price,
right?
And that's kind of where I kind of try to step in and guide people, not make a decision for them, but just inform them. Hey, if you really, really care about price, I'm probably not the best person for you, because I don't want you to think that I did something to you when you signed up for this exclusion, that exclusion, and you were just caring about, like, I just want a $50 a month policy. Like, right. I'm not the guy, But
and that's something that, like, even as a real estate agent, it's good for us to know, so that we can educate our buyers and even sellers who are looking to sell and buy, because they might not even know their existing coverage that they had on their current property, and they've gone through, 2 hailstorms. They've got several wind damage, buyers asking for repairs on the property, and, they're looking to not come out of pocket as much as possible and can theoretically get that roof covered by possibly even the insurance. But just important for us to be able to educate those people and those buyers through that process as much as we possibly can. Because even like you're saying, like the age of the house or the roof, if it's a 30-year roof and it's aged already and the insurance company is only going to pay out X amount of money for that roof, it's important as a real estate agent that we best educate you and help you understand, like, hey, there are going to be some hidden maintenance costs with the homeowner, with homeownership, right? Yeah. Like you're going, and we're seeing a lot of people come from the rental side of things to actually owning, where in the rental, they're in an apartment or they're in a townhouse that's managed by a landlord, and it's like, hey, come fix this, come fix that, right? And in reality, as a homeowner, once you get into that home and get those keys, everything becomes a responsibility to you as the homeowner to maintain.
I always joke the joys of homeownership.
It is, and it's not to scare everybody out there and be like, oh my God, a homeowner, being a homeowner is a money pit, because it's not. In reality, it helps you build equity. It helps you build generational wealth, as I like to talk about a lot, is, generational wealth. As we look at home appreciation and home values and where they're going, it's important for even us as parents to try and set our kids up for success, whether that's, handing down the home that we have, or even having investment properties that we can hand over to them so that they could start their family in the future. For sure.
Well, and you can correct me if I'm wrong, but I believe one of the stats I read recently was a homeowner is, on average, 40 times wealthier than a renter.
Yeah, it's somewhere around there. I don't know the actual statistic, but I know that a lot of buyers that I've helped who've bought their first home, they get that instant, like, wealth satisfaction, right? Like, I own something. It's a pride thing. But also, for years to come, you can see that through that home ownership, they've developed more wealth. They become more financial aware of what they're spending on and how to manage money and things like that, right? Because you got a commitment, you got to pay that commitment. It's absolutely. Like just like your homeowners insurance. You got to pay your homeowners insurance because you need that coverage. But a lot of things are just about education. And even as a real estate agent, as an insurance agent, you go through the same thing. We got to continue to educate ourselves because the world of real estate and insurance are evolving rapidly.
Yes. What I was doing in 2019 is not the same thing I'm doing in 2024.
Right.
It's just it's a different market. It's a different completely different market, right? And there's all sorts of things that we have to just continuously evolve on, and the price has kind of gotten out the window. I'm just happy when we can get good coverage for people now, right? It's just like at one point in 2019 here in San Antonio, there were so many companies that wanted this area, and it felt awesome. You could literally just hear, this is $1,000 great policy, $1,500 great policy, and you're selling these good, solid homeowner policies on newer houses, $50 a month, $70 a month, and it's solid coverage. Like that has gone away. It's just not happening anymore.
Well, and it also plays a huge role. Like with right now, what I'm seeing on my side of things is everybody's becoming more self-cautious of the rising costs of a home and how much they could actually afford, right? So the DTI, right? And we're going to have a lender come on and talk about things like this, but your debt to income, your homeowner's insurance premium can nowadays throw that off if you go with the the Lamborghini of homeowners insurance policies.
Absolutely. Yeah, no, that it can definitely throw it off. And again, it's not to scare anybody.
Right.
It's just part of this whole process, right?
Exactly. It's all about protecting your assets in the end, right? Do you want the bundle package that's going to give you everything that you need at minimum, or do you want the package that's going to give you everything plus some, right? Like you really got to determine that and can take into consideration the age of the home. If you're buying a 40s home, you might want a good insurance policy on that home. If you're, buying something that's 2022, same thing. You might want a good insurance premium on that thing because our homeowner's insurance policy on it because of the cost of goods and the cost of material.
Yeah. And older homes historically cost more to insure.
Right.
And so you're probably going to be paying more, not all the time, but most likely be paying more on that 40s house than you are in the 2022 house.
What was the first year you bought your, well, let's take it back. What year was the home that you first bought?
So 1979.
It was a 79?
It was a 79 house.
So lead-based paint?
I have completely renovated the downstairs and several other areas of that house. And it's constant projects, right? And you're just kind of like, every time you turn around, you're like, oh, I'm spending money. But it's appreciated several $100,000 too, you know?
Right.
And so definitely not a bad investment, even though I have to
still
put
have
money.
It?
Yeah, it's my house.
Your house.
Yeah,
you're
house.
like,
and I've been dumping stuff into it to try to make it nicer and nicer.
Because statistically showing, it says that, you know, in the past, before we're in the market that we're in right now, 3 to 4 years was like the average tenure of a first-time home buyer in their home. Yeah. In fact, like when we bought our home in Washington, because that's where we were living, we bought our home for $300 and 2 years later sold it for $500. Like, it was just crazy. Awesome. Like, we built so much appreciation. Not saying that everybody's going to do that, but that's just the kind of wealth that you could actually build with home ownership, right? Like, that's just the little things that you can do. But I think it's just as important to understand like what kind of protections you have, because if you were to keep that home in your possession and let's just say use it as an asset and use it as an investment property, things along those nature, you continue to build that wealth in your, not only personally but in your family, right? Like, then it becomes something you can pass down. It becomes something that you can offload later on if you're on your bed, whatever it might be. You know, like, it could be something that you use as a monetary asset to either convert to liquidity or just keep in your possession to hand down to the kids to continue having that wealth in the family, because it is going to help you get places in the future.
Yeah, for sure.
So how does that change things, right? Because I look at things from a residential side as like, hey, I'm helping people achieve home ownership, but how does it change, if anything, on the homeowner's policy? Let's say somebody wants to convert it to like a rental.
So, that's a good question. So most home policies that I write in my office at my insurance group, we usually write, it's called an HO3 policy form. Mm-hmm. And so that policy form is, you have to be it has to be your primary house, and, you have to live in it, right? Whoever purchased the home. When or if you wanted to convert it to an investment property, what policy I like to write, and there's several other policies too, but the one that's most comprehensive is called a DP3.
Gotcha.
It's a dwelling policy, and it's Form 3, right? And so that policy is the most robust investment product that we have available. And so I like writing those, but it changes the risk, so it's got to be written on a different policy. And I felt so bad. First time I ever heard it actually happening was about 2 years ago. I was at a wedding, and somebody moved out of their house, put renters in their house, and they bought another property, and the insurance, there was a total loss, fire happened.
Oh, wow.
And there was no coverage. And they tried to fight it. They went to attorneys, but it's explicitly written in the policy.
Once it becomes non-primary.
Yeah, this is not it was not your primary house. And so there's no coverage. And you're kind of up to an insurance carrier's discretion at that point, you know. And
whether or not they want to
cover it. So that's what I always tell people. It's like, this is serious.
Yeah.
There might be no coverage if you decide to just say, I'll just keep that HO3 policy on there. It's like, no, it's the wrong form. And you could experience a complete loss.
And then even with, like, let's say that DP3 policy or whatever, right, you still require the renter to carry a renter's insurance policy.
So as a responsible
homeowner,
investor, I would always suggest that. The insurance company doesn't require it, though.
Gotcha.
But yes, that's a very good idea, because that would be like the first layer of coverage before they go after you, right?
Yeah.
Especially on the liability, because you can't control your tenants.
No, yeah, you can't. Whether or not they're going to start the house on fire or do something. Uncanny.
I would always recommend having somebody with a minimum of $100,000 liability.
Right.
Minimum. I would tell them to try to get it at $300,000.
Makes sense.
Because, and then I would personally, if I had a investment product, I would also make sure that I had a $500,000 liability and an umbrella, at least at $1 million, covering that. Especially if that property is in your name,
right?
Because that is an asset that if you get sued, goes bye-bye.
Right.
You know? So.
Yeah, and seeing a lot of people who buy their first home don't really understand kind of like that concept. And that's kind of my ultimate goal with this, and having you on, right, as well as being a host on it. On the Homes and Homies podcast, as we would say. But it's one of those things where we just want to educate and bring value to those out there who may be looking to buy, right? Look at things that into essence of like, what do you need a shop for, right? Because they don't tell you. Like, the lender is just going to give you a referral to their insurance group or whoever it might be and say, hey, let them quote it. They're not going to really give you a breakdown or explain too much unless you start asking the questions. It's such a very fast-paced like industry. Even like we were discussing before we went live here, as an agent, like, I still don't claim to know every single thing. So there's going to be some questions that I get asked throughout my day that I'm like, oh, let me get with my insurance guy and ask, because I want to make sure that you get the actual answer that you need, right? The appropriate answer, not the answer that shoot off the hip. So, and these are like little things that you might make or break whether or not they want to go with a specific policy or not, or get specific coverage. But ideally, it all breaks down to, like, as a real estate agent, I got to do my best to educate as much as possible on that side and forefront. So getting them in the contact with somebody like you who's going to give them that value breakdown, because there's little things in there. Like, you could look at your exclusions and they might exclude, 20% of the siding or something really crazy. Like, they could write whatever they want into a Schedule C on there.
Well, with most companies, if you're writing in the HO3 policy form, it's all risk replacement costs for the structure, the majority of the time. And I mean, there are some companies that can sneak some stuff in there, but that's why we do like to write that policy, because everybody knows what's included in those.
Yeah.
And as long as it's through the standard market, now there is some. And we're not getting into this
today,
but there is E&S insurance that you can get that is just chock full of exclusions and all sorts of fun things. But yeah, so but for a standard home policy written on that form, there's solid coverage with minimal exclusions, but there are things that you need to know. We talked about earlier about your wife's wedding ring, right? So jewelry on almost every single one of them is either capped at $2,500 or $5,000,
right?
And most of the time, you're in this area, 1% deductibles is fairly standard, right? And so if you're 1% and your coverage is $500,000,
right,
your deductible is already eaten up all the coverage,
right?
There is no coverage for that jewelry. So
yeah, and I mean, I think those are things that really kind of like factor into the impact on how much your homeowner's insurance is going to cost you, or whether or not you should get its own individual plan. Like, that's one thing that we got asked when you buy a home is like, how much coverage do you want for all your possessions?
Right.
Like how much value is within the walls of your home, like
Absolutely.
TV, sofas. Do you have any safes with jewelry in them?
Absolutely. Well, and Texas, like a lot of us in Texas have a lot of firearms, right? So there's limits on firearms. There's limits on jewelry. There's limits on fine art. So these are important questions, and just the knowledge, right? Like, so I don't have a lot of my wife's jewelry scheduled,
right?
Or sometimes it's called a personal article floater.
Right.
If it's added onto the policy, it's called a schedule, and most of that stuff is not scheduled, but I'm okay with that. It's like she's got a couple diamond earrings that are a couple $1,000. If we lose them, we lose them.
Right.
Like, and I'm fine with taking that burden,
taking the replacement. Yeah.
Right. But that doesn't mean that you're fine with that.
Right.
And so it's such an individualized. It should be individualized.
Right.
Everybody should get the opportunity to have the knowledge of, okay, so I can take that risk myself. I don't want to take that risk myself,
Right.
you know? And so that's kind of what I've done with my own stuff. Is like, I'm like, okay, cool. I don't need to worry about the jewelry.
Mm-hmm.
I'll replace it. Like she'll want some bigger ring anyway.
Right.
So
she'll want a bigger. She wants more diamonds.
but yeah, like I'll replace that if
Yeah.
heaven forbid something happens, right?
Yeah.
But I definitely don't want to go without service line coverage.
Right. Makes sense.
You know?
See, and
So-
those are things that you don't really like when you're buying or shopping for homeowners insurance. Those are things that you don't really think of because, for example, like my wife's wedding ring is written on its own policy, right? Like it's got its own article or it's personal property or whatever
Yeah,
they
it's,
do.
it's called a personal article. Floor.
Right.
Yeah.
So, but that's separate from my homeowner's insurance, where my homeowner's insurance, they cover basically everything within the walls. So it's kind of like, you get this mentality of when you're helping people, and even I'm guilty of it when I'm buying my first home years back, right? Like you're thinking of it like kind of as you're shopping for car insurance, but it's not nearly the same because the car insurance, they're going to ask you, what year's your car, right? It's 2022 Dodge Ram 1500. And they're going to quote you and cover you based off the value of that truck. And
There's a little bit more that goes into car insurance, but
right.
but yeah.
But it's just like the general concept, right? Like you're going to
There's about 12 coverages on
Right.
an auto policy that have varying degrees.
But you don't, as like on an auto insurance, you don't have the option, at least to my knowledge, to actually select how much you want to cover within the doors of that car.
You are correct.
So
Yes.
whereas like your homeowner's insurance, you get to determine like, hey, I got $100,000 worth of furniture. I got $4,000 couches. We got $3,000 in TVs.
Yeah.
Like you get to actually determine when picking your homeowner's insurance policy that value to a degree.
To a degree, yeah. So most companies will do breakdowns, almost like a cookie cutter on those policies, where it's like if it's $500,000 replacement cost for the house,
Right.
a lot of times they'll break it to personal property to $250, and some companies will let you either go higher or lower,
Right.
but that's kind of the standard. Is they'll go 50% of coverage A. Coverage A being the replacement cost of your house.
Every house.
Yeah.
Makes sense. Yeah, because I mean, when we look at the general scope of things, like being a first-time home buyer, you're probably going to go from something that's like 900 to 1,000 square feet, not just generalizing it, but you're going from an apartment where maybe you haven't had that, like, I'm at a loss for words right here, but maybe you haven't had the furniture that all goes together, right? Like you haven't had the bed set with the nightstands and the works, right? Like you haven't had that. And when you buy your first home, like at least that was our first thing. Once we closed and got the keys, it was like, hey, let's go to IKEA, let's go to the home goods store and
Make sure you do it after you bought.
after after you buy the home. Don't go throw stuff on credit cards. Don't do nothing until you close, have the keys, and they tell you funded and you have the money. Even then, wait a couple days till everything settles just to be in the clear. So, but yeah, you're going to go and you're going to buy furniture. So it's important you could shop, but not buy. And I put a big emphasis on that so that you know the value of how much possession you're going to put within the walls of that home.
Yep.
So as you're shopping from that homeowner's insurance policy, you can, of course, cover your assets, right? Cover everything you have within that wall.
Absolutely.
And I think a lot of people, like even me, like we were talking, and like I feel stuck with my insurance provider right now just because of the situation that we're in. But you could have a homeowner's insurance policy with one provider, and then the next year decide you want to change it. Like you're not
You can always shop it.
Because I talk to so many people on a daily basis. They're like, can I change my homeowner's insurance policy? I'm like,
Yes.
absolutely.
Yes, you can.
Just call your homeowner. If you want to go with the same people, call them. Notify your mortgage provider, whoever it is, because oftentimes they'll have providers that you can go through with them. But the most important thing is to make sure you keep them updated, right? Like if you change your homeowner's insurance policy, make sure you update them, put them in contact with who you're going to go through.
For sure.
Because most, if not most people will have it paid through their mortgage.
Most people have an escrow account.
Yeah,
Right? And that's something we can do for you also, and we do it all day, every day for our clients. Is okay, this company went up. Let's look at all the other companies out there, and sometimes we can save some money. Sometimes we can't.
Right.
And so we'll let them know too. Like, hey, listen, we were able to save you money here. Would you like to move forward? No, I don't like that company. Sounds good. We don't, or
Take them off the list.
Yeah. Okay. Sounds good. We won't do that. And then, absolutely. Thank you so much. And let's move forward. And I just saved, $500, and that's what we do. That's kind of my shtick.
Well, and I mean, I guess that's one of the benefits of in the real estate industry. Like, when I help people, there's differences between like mortgage brokers and like banks, right? Like we always have this discussion of like, when we're talking to buyers or when we're qualifying buyers and they're asking us those questions as to what are some good lenders, who are some good providers, my network is a lot of brokers, because the brokers do the shopping for the actual buyer. But that doesn't mean we won't go use whoever they want to use, right? It just means that it's easier, in my opinion, for them to use a broker because they do the shopping. Like you have probably a list of 22 providers that you could actually write a policy for.
Oh, absolutely.
If not more.
Yeah, we have numerous marketplaces that we can shop for lots of different policies.
Right. Whereas, they might not know that. They go to an insurance provider, apply, they get, highest rate they can get. They go to another insurance, and it's just kind of like this revolving shopping door that you're going door to door to door to door to see who's going to give you the best policy. Whereas you can go to like a broker or somebody like you who has a marketplace and can go to all of them for them.
Yeah.
So, yeah. And we see the same thing with like mortgage lenders and brokers and things like that. Like they have a portfolio that they could shop, right? Like they can sell to. So just always good to understand the differences in that aspect and understand like what to do, when to do it, or when you're in that situation. So just some cool things. So I just want to kind of close out with some homeownership responsibilities and just talk about like ongoing responsibilities, because we were talking about this at the beginning where we're looking at like things like deferred maintenance. We're looking at things that the insurance covers, it doesn't cover. I'm always educating and kind of coach my buyers to, hey, have a rainy day fund, right? Because you never know. You might have a plumbing main leak. Who covers everything from, the street to your main, right? Generally, that would be the city. And then everything after your main is generally the homeowner. So,
and I mentioned that coverage. That is a coverage available with several companies. It's called service line coverage. Mm-hmm. That would be from the
main on.
I'm having a space out, but
from the meter,
from the meter to your slab, basically.
Gotcha.
That whole area used to be no man's land. Mm-hmm. There are companies that will provide some coverage for it,
right?
And so it's at a lower deductible most of the time, also. So
right, and I mean that's nice that you point that out, because that's a huge expense.
It happens all the time,
and it happens here when we go from hot to cold, to cold. The ground, everything's contrasting and contracting. Like it's just, it happens. I know it happened to us. We had a, the PCR valve freeze up on us, which is your pressure control valve, or whatever it is, froze up on us. And we were throwing like almost 100 pounds of pressure through our water lines. We were like, holy cow. And it happened because they're doing some new construction on the highway, right off the highway where we're at. And I guess it's just the rise in the temperature, like the high-low, and it just shot too much. And we ended up sparking a main leak in our master bath. So we caught that, luckily. But, I mean, still, we ended up having to, cut drywall out, have contractors come in, remediate the water damage.
And what sucks, sometimes it's under the deductible amount, so it doesn't make sense to make a claim.
Right.
Sometimes, and I never discourage anyone from making a claim, but I always do tell people, it's like, hey, you might want to get some pricing before you go down the claim road.
Right.
Because if you have a bad water break in your house, I mean, let's get the water restoration company. Let's move forward with the claim, because it's going to be $30,000-$50,000. Right. But if it's a little pinhole leak, it's like, hey, before you go, I know it's scary and I know it's like irritating, but figure out how much that's going to cost first.
Right. Yeah, and then just depending on how much it is, sometimes those are costs that as a homeowner we got to eat, unfortunately. It's not to deter you.
The joys of homeownership.
Yeah, it's one of the many perks. I mean, it just is, right? Like homeowners' responsibilities, but I don't want to talk out of context here, but generally your equity will outpace the amount of money that you should have to put into your home.
For sure.
And then there's also plans out there like, home warranties that we can provide to buyers when they buy buy their home, or they could even buy them after that first year, just depending on if the agent doesn't provide it or the seller doesn't pay for it. But it just covers general things. You could pay a service fee to have a contractor come out and look at your toilet that might be running, or look under the sink because you got a drip, right? Like there's things like American Home Shield, Fidelity, National Home Warranty. There's a lot of them out there that you could actually get into that'll help cover. But they also, again, just like homeowners insurance, have limitations as to what they're going to cover.
Right.
The AC, things like the condenser, the, Freon top-offs, things like that. So, but there's ways out there that you could strategically protect your assets so that you're not left in a vulnerable situation if something were to ever arise. But that just, goes all into being a smart homeowner.
Absolutely. Yeah. When you mentioned the AC, it's like I would recommend having someone come out and check it in the wintertime, in the summertime, right? Twice a year.
Yeah.
Make sure everything looks good. If the coils need to be cleaned, clean them. And that is another expense that you're going to have at some point.
Right.
You got to replace an AC every probably 15 to 20 years.
Right.
It's not fun. It's the joys of homeownership.
It's homeownership, and it's not to deter anybody listening out there to the podcast, because it's it is a true blessing to be able to own a home. The same to the same flip script of that is, think about how much it costs you to move from apartment to apartment.
Oh,
yeah.
Well, and all that money just goes away. It's like with homeownership, you can almost look at it like a savings account, because you're paying your mortgage down, right? Yeah. And you're paying yourself. Renting, every bit of that goes to the landlord.
Yeah. Well, and the funny thing too is, and it's not really funny because not everybody's in a situation where they could buy, and we totally understand that, and we, agree. But it's just so crazy that like some of these apartments will require like first and last month,
right?
Or they'll require astronomical security deposit, which is usually first month's rent. You get a security deposit for your pets, and you're there a year before you move to do it all over again.
Yeah, it is kind of wild when you start thinking about it.
Yeah.
And then it's even wilder because if you have a stable job that you've been at for a while, and even if your credit isn't good, it's really not as hard as some people think, but it's just, I think a lot of us get it in our heads that it's impossible.
Right.
And it's just a couple of tweaks, and you could be a homeowner in 6 months.
Right.
Yeah,
and I think that's kind of like, even for me, one of my biggest reasons why I got into real estate almost 9 years ago now. Wow, it's been crazy. But my wife and I had just met. We were going to buy our first home here in San Antonio, and it was out in Shirts. I'm not going to name the builder just because I don't want to name any builders here. But we were going through the process, put our earnest money down on our contract, chose our lot, and the builder comes back and says, well, we decided that green belt behind you that we were going to build, that nobody was going to build on, we're going to build 100 more homes in.
Oof.
So my wife and I were like, okay, well, how does that impact us? Well, they were going to take 10 foot of each side of our property that they had sold us. We were going to be on a third of an acre in this neighborhood. They were going to take 10 feet each direction. So they're going to take our pie shape and basically cut it 10 feet in on each side and the back side, but still charge us the premium lot.
Oh, wow.
The same amount for that lot. And, this was our first home we were building. I didn't know anything about real estate at the time. Like, I never, took the time to look into it.
Yeah.
So this was like one of the biggest things that encouraged me to get into it, because like, it was like a gotcha moment, right? Like, it was like, hey, now you want to back out? We're going to keep your earnest money.
Ew.
And I'm like, well, can you legally do that? That's like $10,000, like, could you legally do that? Well, we're the builder. We could do whatever we want, kind of scenario. So, that was one of like my biggest pet peeves, and reasoning why I got into real estate was because I don't ever want anybody to feel like they've been taken advantage of, because this should be the most fun and most like happy time of your life when you buy a home. right? Like
absolutely.
it should be one of the funnest things. And I say fun because it should be fun. Like it's fun going to look at homes and trying to envision yourself, raising a family or seeing, having your dogs or fur babies run around the backyard. Like, it's one of those things where you don't really know until you are in it, but it should be fun.
Absolutely.
And real estate should be professional, but it should be fun. Like I have fun seeing people's eyes light up, glaze over, hey, the kids could do this. You start organizing things. And that's what I tell everybody. It's like, you'll know the perfect home when you find it because you'll start picturing, envisioning yourself living in that space. Like when you bought your first home, was it like, oh, this will do? Or was it like, oh, no, we're going to bring so-and-so home here and like, we could totally raise a family. It's got a big yard for entertaining. Like,
right. Well, my scenario is a tiny bit different. I always joke I moved 40 feet in my life.
Yeah.
So, but so I bought the house I grew up in for my parents.
Yeah.
Yeah. So,
but it's basically almost generational wealth, right? Like it's almost like it was not. I don't want to call it hand-me-down because you paid for it, but like you had the opportunity to buy something probably at a pretty good deal from your parents.
Absolutely.
So as a real estate agent, I'm always like looking for opportunities. Like, what can I invest in, right? Like, is there a property here? Is a property here? And I told myself, I want my son to have like 20 properties inherited by the time I'm gone. Like, I want him to be able just to have a portfolio of properties that he can either A, start offloading when we're gone, B, select whichever one he wants to live in for the rest of his life, or C, sell them all and buy his dream home. Like, set him up for what he wants. And I think that's kind of what home ownership does for you is it gives you like that sense of financial freedom. Like you get the sense of like, this is mine. I can paint my walls whatever color I want. I can make this my own home. It's going to gain equity, but I could also use this as an asset against the bank to go do more things, right? Like I could go pull out a HELOC for $100,000 tomorrow and go, use it for either the home or put a down payment on another investment property.
Yeah, absolutely.
Like there's strategic ways to start accumulating and building that portfolio that you probably couldn't, I guess, what would you call it? Like journey through, right? Or journey to. I was like, trying to think of the name, but like that you could go down to try and start, building that portfolio or even buying your first home, right? Start setting your roots down. Even if you don't think you're going to be in a home for a long time, with the way home prices are going, it's kind of a wise decision to buy. Because even if it's 3%, right? Like,
what's the rule? If you know you're going to be living in San Antonio for the next 2 years,
I never thought I would be.
But I'm just saying, if
I left and came back.
Yeah, right.
The tacos were too good.
We do have some good tacos.
We have some.
Yeah.
Oh man, they don't call them tacos up north though. Have I ever told you what they call them?
Burritos.
They're called burritos.
Yeah.
It's totally off topic, I know, but man.
Well, but I mean, it's just like, but even their burrito, it's like when Taco Bell is like a decent Mexican restaurant, it's like something, and nothing against Taco Bell, but if that's like the good Mexican food, I'm like, oh no, I'm too far away from San Antonio.
So funny story, and not going. I mean, we're getting derailed, but that's why it's called Homes with Homies, right?
Yeah,
home and homies.
We can edit all this.
Yeah, when we first moved up to Washington, it was total shell shock. Like we moved up there maybe 30 days after I got married, and we moved up there to be closer to family because my wife's father was battling some health issues, and he's good now. He's solid. He's healthy. He's shooting archery probably as we speak right now. That's awesome. At almost 80. Like you gotta applaud
compound bow.
Compound bow.
Oh wow, you got some strength to.
I think he has a compound and original bow. I haven't explored too much, but I know he shoots archery. So we moved up to Washington. It was shell shock, dude. Like, went up there, sat down at my first Mexican restaurant, and I'll never forget this experience because I literally was like, man, I'm in the mood for some chicken fajitas. Like, I'm gonna devour some chicken fajitas. I tell my wife, like, and we sit down. Fajitas come out. They smell super good. Like, look really good too. And first bite. Mushroom.
That ain't right.
No, I'll tell you what, that is not right. First bite tastes like a mix of dirt and Mexican food. Like, So I had to tell him to hold the mushrooms. And I thought I'd be a wise guy and get the chicken enchiladas the next time. Mushrooms. No. So apologies to the Northwesterners up there, because we will have some of you probably listening in because of all my connections. Mushrooms do not go on chicken fajitas, and you can debate me all day on that. Speechless.
Yeah, I got nothing.
Yeah, but it was just so weird.
I was also gonna say, like, when you said that it was shell shock, I was like, what? No sun?
So we were on the eastern side of Washington. So we got about 300 days of sunshine.
Oh, cool.
65 days of like bad, snowy, wet, cold, freezing rain weather. So we were in Spokane, and that's where we lived for a majority of the time. We lived a little bit in Tri-Cities, Washington as well. Sold real estate in both areas. Did it really, really well, exceptionally well. Yeah. I think one of my biggest years, I sold about 75 homes personally. And with a team of 15 agents, we did about 475 transactions. Yeah. So that was really, really good for us, but it was time to come home. Like, it was, one of those things where I did my thing. I made it to the top.
Yeah.
Then I got dropped like that. Drop it like it's hot.
Yeah. I thought you were like, so my brother is in Kirkland.
Yeah.
And he's like, dude, I kind of miss the sun.
Well, I can see that.
Yeah.
Yeah. Like,
he said, but there's about 2 or 3 months where it's gorgeous.
Yeah. See, and it's funny that we were talking about Washington now, because we were just talking before we went live on the podcast about how the different in landscape of real estate is, right? Like, so in Texas, the inspection is part of the purchase and sell.
Yeah.
And we here in Texas negotiate what we call as an option period. And your option period is your period where you could back out for anything. Right? So as a Texas buyer, you have the right to an inspection. Whether or not you could back out for the inspection is a different story.
Right.
In Washington, we had contingencies. Everything was a contingency. Our purchase and sale was 4 pages, and we would attach contingencies to our offers or our contracts, right? So we would negotiate an inspection. We would negotiate earnest money. That was all negotiable. Same thing here. Earnest money is still negotiable here in Texas. The only thing that we do negotiate is an option fee, right? And your option fee is for your right to execute for any reason. Whereas up there, we didn't have to negotiate an option fee. So it's a little different, right? Like, I did it for 7 years up there, and coming to Texas, the contracts were total shell shock. So I'm like, turning, burning, still learning. I'm a broker here, so it took the 360 hours of education, because I was like, I need to know everything there is to know about that contract, because I want to be able to give the best advice I possibly can to somebody selling or buying a home. But it's just so crazy how it's so different in the landscapes. The food's different. The culture's different. I will say I do miss Washington a little bit. I'm a Southern boy. You and I grew up. We went to Mac. You graduated a couple of years before me. But, man, I don't know. After 30 years in Texas, I was ready for the heater to turn off. And I enjoyed it for a while.
It is brutal in the summer.
Well, and the other thing that we didn't have was mosquitoes. We had mosquitoes, but we didn't have mosquitoes.
Yeah, but you guys have like hummingbird mosquitoes, man. If you get a mosquito bite out there, I just remember going out there. I'm like, man, I got bit once, but it was like a freaking hummingbird. I was like, God, that killed me.
Yeah, I mean, but here you got mosquitoes when it's like 30 outside, right?
Here you got the little guys, the big guys. They just constantly.
Yeah.
For about 8 months out of the year.
The one thing that was super fun to do up there was when it would snow. So, like, everybody was terrified. Like, my parents, when they came up to visit us for the first time, I think we got like 1.5 feet of snow that night. And they're like, is our plane going to be able to land? Are we going to be okay? I'm like, no, Mom, Dad, you're going to slide off the runway because there's so much snow, or you're going to land and just stop. Like, it's going to. So they weren't, like, mentally prepared for how prepared they get up in the Northwest. Like, it was like snow plows going through even before there's like 1 inch of snow, like getting it off, de-icing, like just those types of things. But I always remember, like, I had it was a 2019 Dodge Ram 1500, big tires. And I used to love doing donuts when it would first snow. Like that was
That sounds
not
fun.
not breaking the law, of course. But
On private property, of
on
course.
private property, on closed roads in Mexico, as they would say. But yeah, it's just totally different in the landscapes. And like I was telling y'all, when we moved from Washington, our insurance premium went from like $200 a month to like $320 a month. So I guess to wrap it out and round it out, explain a little bit like what factors into those types of things. Let's get off the topic of homeowners insurance and talk a little bit about like just general insurance, right? Like car insurance. I went from $200 to $300. What are some of the factors that weigh in there?
Yeah, so there's several factors that weigh into automobile insurance. I can't talk. Audible.
Grade 64, Red 82.
Yeah, so auto insurance, every zip code in San Antonio has a different rating too.
Right.
Because there's more construction going on in certain areas. And not saying that there's not a lot of people in Washington, but in San Antonio area, I know that there's more accidents.
Yeah.
Right. And so that'd be one.
You mean the drivers here are a little bit more risky?
Well, I'm just talking about the volume of people.
Yeah.
And I think, correct me if I'm wrong, but Spokane has about...
Spokane, we had like 600,000 in our city populace.
And so we have about, 3.5 million
somewhere
around San Antonio, right? And so 2 million in the city.
With speed limits as high as like 80 miles an hour on I-10.
So you have that. And then you also have just the fact that we had more hailstorms last year than anywhere else in the nation.
Right.
Well, if you have comprehensive, which is sometimes it's called all other accidents, other than accidents, that's covered, right? So that's a covered loss.
Yeah.
And
I guess that would be like my falling article policy that I got.
Right.
Something fell out of the sky, hit my window.
Yeah. That's covered under comprehensive. Gotcha. And then, the collision is covered under collision if you hit somebody.
Right.
And cars are getting more expensive, but it's happening a lot in this area. And the insurance companies know that.
Yeah.
They're going to charge.
And there's manufacturers that start with an H and end with an I.
Right.
And a K and an A that are having probably some more issues than others.
Yeah.
But yeah, so for a lot of people listening out there, you probably, if you haven't moved from one area to another, and the reason why I bring that up is because right now we're experiencing a lot of like interstate moves, right? Like people from California coming to Texas, same thing. When I looked at the demographics of people coming here, it was like California, New Mexico, Colorado. Like those are our three biggest states that are coming to Texas.
Well, and I was reading an article the other day. They call it the Texas Triangle.
Right.
Dallas, Austin, San Antonio, Houston, kind of make a little triangle. This is the fastest growing area in the world.
San Antonio or that triangle?
This triangle between Dallas, Houston, Austin, and us.
Yeah.
And it's just, there's a lot more
the
people
more
coming.
people that come in, the higher our rates go.
Well, it's just more things happen.
Yeah, right. More accidents happen.
But it's also like, so there's always two sides to a coin.
Right.
But that means it's going to be a big booming economy in these areas for a while.
Right.
Whenever you have a big booming economy, you have a lot of traffic.
Right.
When you have a lot of traffic, you usually have a lot of accidents.
Yeah, and I think they're widening 1604 to like 4 lanes now, and putting a big old overpass on 35. Thankfully, because that overpass has been long overdue.
Yeah,
coming 35 south to 1604. But I mean, those are just like little things that people like that in general. Like even me, I didn't even think about. Right, like I didn't think about, my insurance policy is going to jump up $120 because I'm moving back into a big city.
Now, I would say go ahead and let me look at it and see if we can save some money on the auto insurance.
And he saves me money
without sacrificing coverages.
Yeah, that's the big part, right? Because when you look at insurance providers, not to say everybody does it, but they do it. Like they want the deal.
So,
but they do have a tendency
and years ago, I made a decision to not be that guy.
Yeah.
It's like, man, I'd rather not have your business than try to do something shady to get it.
Right.
And I'm okay with telling you, hey, you got a good price, everything looks great.
Mm-hmm.
Let's shop it again in a year or two.
Right.
Or, hey, it looks good. I cannot beat the price. I think you're vastly underinsured. I think you have holes here, here, and here.
Mm-hmm.
If this was me, I would do it like this, but you do whatever you want.
Right.
Yeah. And I have no problem telling people that. I do it all day, every day.
Right. Well, and that's what we ultimately would want to do with our professions is be that honest, integrity, and faithful person that we possibly can to those, to our clients.
Yeah.
So I know, off topic, I got Sprint. And I had Sprint. Now it's T-Mobile, right? I'm with T-Mobile Tuesdays. Anywho, now that everybody knows my cell phone provider, let's not divulge my number unless you want to buy a home. If you want to buy a home, psych, let's not. But we could help you buy a home. That wasn't a joke. We could help you get insurance. When I went and got my plan with Sprint, they were doing the we'll cut your bill in half promotion.
Yeah.
Well, I had AT&T at the time. AT&T was like $120 a month. So Sprint was like, well, we'll cut your bill in half. Well, they were literally cutting your bill in half. Like, we have a $60 phone bill for 4 lines. So when the merger between Sprint and T-Mobile happened, we, of course, had to go in and get our SIMs updated because with Sprint, the SIMs wouldn't work. So we went into T-Mobile, and the salesman's like, and I'm bringing this up because he was honest. Like, it was the first time I've gone into a cell phone store where they're honest and they're not trying to get you to switch.
They
but
hook you like, oh yeah, by the way, it's going to be like an extra $15, and that one's going to be an extra $35 on your bill. Okay.
Oh, and you need these JBL. You need these JBL speakers.
I already bought it. Like,
yeah.
My bad.
and don't forget your Apple Care. Like, that's $16 a month. We need to get you that Apple Care because I know you got that little 3-year-old over there that's going to go and sit on it and break it. But they did the we'll cut your butt. We walked in, and I'm just here to do my SIM cover or whatever, swap or whatever. So, but we ended up buying new phones. We weren't in there for phones. He didn't sell us some phones, but we ended up buying new phones, and it was great. Like, good experience overall. He was honest and so forth. But I just remember he had somebody else ring us out because he was getting off shift, so he was having another, and he points at the girl, and the girl's like, "Why are you pointing at me?" And he goes, "Do not touch his plan." Like, do not change his plan. And she goes, "Why?" And she looks at it and goes, "Holy like, that's a good deal." And he's like, "Do not change his plan." And still to this day,
I'm phone bill jealous. I'm not gonna lie.
You want to get on my line? Oh wait, let's not say that. Who wants a line? Like, I'm gonna resell these lines. Just kidding. We're not gonna do that. But yeah, it was just it popped in my head because we talk about honesty, integrity, and being faithful to our clients, especially like in the real estate side. We have our fiduciary duties to our buyers and to our sellers. I'm sure there's some sort of code of ethics or ethics that you have to your sellers as well. So it's always just good that we stay in alignment with those. But yeah, that popped into my mind. I don't know why, but it was just weird. Like, do not change his plan. like him pointing at her was she's like a deer in the headlights. Like, why are you pointing at me? But
okay,
yeah, okay. We've been with him for a while now, and everybody says Sprint was terrible. I mean, I haven't had any drop calls. You were able to get hold of me, right?
Yeah.
Everybody else out there, if you want to give me a dial, I'm just. Anyways, guys, you've been listening to the Homes and Homies podcast. I'm Ernest Enriquez with eXp Realty. For all your home needs, give me a shout.
And I'm John Hansen with my insurance group. Anytime, anything I can help with, give me a call.
Yep. We'll be back next week with a new episode. Till then, do we do that? Don't do the monkey.
Can we do the? I don't know if we can do. Can we do the monkey?
Do the monkey. Peace out.